Okay, welcome to another one of my podcasts here to help with finance. And today, very excited because I've got the opportunity to have a chat with a long-time friend acquaintance. We've worked together in different guises in the same company, and our journeys have gone different paths, but we've crossed paths many times. Delighted to welcome Gavin Seaholme, who is a sales director of real estate at Shawbrook Bank. Gavin, thank you so much for joining us.
Great to be here, man.
So for all my listeners, can you just tell me a bit about your history and where you are at the moment?
Yeah, so worked in specialist finance for 25 years, as you well know. And yeah, it's been an incredible journey working for various different lending institutions, but predominantly in the specialist finance space from G Money, I Group, Money Partners, all the way through to now at Shawbrook. And I've been at Shawbrook now for 10 years.
Amazing. Okay, so you have huge amounts of knowledge that you can share. So I just want to understand, let's talk about here and now. We've had the budget. If you get a huge, you've got so many clients coming to you, you will see a number of trends appearing. I'm just interested. If we go for the, small landlords. If we talk about small landlords at the moment, who've got a relatively small portfolio, since the significant changes, have you seen these landlords run to the hills, get out of the business? What are you seeing with that?
Yeah, so if we take it back to the budget, obviously rates started moving, swap rate environment moved quite quickly, and lenders had to either pull products or realign their products with different rates. I think if you look at the smaller landlord, and their strategy has always been to buy, refinance and regurgitate the funds and keep moving on, based in a low rate environment. Now that's changed. We've kind of, what was probably seen as quite low is now kind of corrected itself. And actually we kind of at Shawbrook, we see more of the professional investor anyway. We don't really see that kind of first time landlord, but what we have seen, and I can put myself in this bracket because I am someone who's got a few buy-to-lets myself, maybe that actually it's time to just pause, reflect, look at what happens with the sort of DSCR and the rental performance of them properties with the new rates that are out. Depending on when my fixed rate might end, maybe that will change my thinking of what I'd go forward. So we're kind of, what you allude to, sort of the not more kind of dinner party landlord, as I like to call myself, whereas now probably savings rates is probably more attractive to probably put some finance into in the short to medium term.
Right. Okay. So going into that, then, if you're saying Shawbrook obviously look at the professional landlord space, what are the opportunities out there for them? If the market is, if everyone should be, if you're saying the smaller lot should be just take stock, look, breathe, and see, what are the opportunities?
I think they can take stock, look and breathe, but I think they have to appreciate that you're probably going to have to put a bit more of a deposit down or a bit more funds into it yourself, due to the fact that the rates are higher. Therefore, you might have to put a bit more and you can't leverage as high. I think the more professional landlords might have an opportunity to refinance, to create some wriggle room in their portfolio, to either raise some finance to keep growing, or they might look to deleverage. We're seeing a mix of that at the moment, but you're also seeing a bit of a diversification as well in what they're doing. But traditionally, you kind of have to look at it at what the strategy is, how it's based. Are you in it for a cash flow kind of perspective, so therefore that is your income, or are you looking at it more of a long-term appreciation gain on the asset itself? And depending on that, depends on what your strategy is and depends on where you want to invest in the UK as well.
Wow. Okay. So I'll tap on a couple of things there, but I think it shows that's exactly reflecting in our business. I think the people who were gearing up for these purchases for the cash flow element has really significantly dried up. But the people who are looking at the long-term view and are used to it, are seasoned investors who understand the markets and the ups and downs that go with it, are holding tight and seeing opportunities. Touching on two things here. First of all, obviously Shawbrook is huge. So do you see there is a natural steer or an increase in short-term bridging finance or term finance, one versus the other? Do you see an increase in one versus the other at this moment in time?
Yeah, it's a good question, because you've seen some recent results that come out from the STL about the growth of bridging finance, but a lot of that was in the regulated bridging space, which is predominantly sort of home residential mortgages. where people were trying to make sure they locked in the property in an environment where rates were changing around. I think the smart investor now uses bridging as a tool to add value, and we're seeing that still, and that trend has continued and has probably grown a bit more now. When you look at purchasing a property that you may get some sort of discount or undervalue purchase on because of the current environment, people are disposing of stock, or you'll be looking at various opportunities, and then you can look to add value by bridging finance by doing refurbishment, change of use, and so on. And then you're seeing that change there is being reflected, and people are adding that value and then being able to leverage a bit higher and actually make it more income producing. So a classic is 3-bedroom house, 5-bedroom, turn it into a 5-bedroom HMO, for example. That we see a lot of that, and that trend is continuing. We haven't seen that fall off at the moment.
Right. Okay. We found the local authorities are getting much tougher on HMOs in different areas. I'm not sure exactly why, but there is that trend there. Okay, but you've touched upon then the HMOs. Do you see an actual diversification over the last, let's say, 6-12 months to the type of properties people are buying? Have they stopped commercial? Are they going only for the HMO? Where do you see any kind of analysis that actually sees any kind of trends for people?
Yeah, so the sort of trends we're seeing are, again, what I touched on earlier, will be around higher yielding properties. So you may want to be looking further afield. So we're based in the south. You may be looking further north for higher yielding, but you'll get lower appreciation on them assets, right? It's a longer play. Whereas if you're within the sort of south area, you know, Milton Keynes down, you'll probably have a squeeze on the yield, but you'll see a better appreciation of growth. So that's one strategy we're seeing, and especially with rates rising, we're seeing people move further afield to get that yield, again, based on the cash flow model. We're also seeing still a further increase in demand for commercial and semi-commercial. The only kind of probably caveat to that is it's a bit of a longer play with commercial, because obviously that property can be a very volatile property in a market. When it's negative market, that property could fall heavily in value. But actually takes a bit longer to recover. But also you have the certainty of a lease, depending on what type of property it is. Retail can be kind of a nervous area at the moment. But then if you're looking at office and industrial, that seems to have held slight dip, but that's probably just a correction after COVID. But we are seeing more professional landlords look at different various asset classes. It may be third-party leases, serviced accommodation, holiday let, and you can see that all drives that higher yielding kind of proposition for them.
Brilliant. Okay, well, that's been a huge amount. I've just got one question as well before I let you go. You mentioned that people, you know, the landlords are looking at different things, and they are considering overseas investments and purchases. Do you notice that? I mean, obviously, in terms of, I'm not sure if that fits a Shawbrook portfolio, but I'm talking about in terms of the overseas investments. Are you seeing people going that way?
Not really. We're kind of we're seeing probably more of an investment from overseas into the UK, basically because of you know, the strength of the pound versus other currencies. Other currencies may be more attractive. There has been a dip in values, but not the dip that we expected. And we kind of news recently is that we're going to avoid kind of recession and come through, and house prices are kind of stabilised. So, but we see a lot from expats, for example, where they're looking at joint venture between someone based in the UK and someone based abroad. But it's not an area of expertise that Shawbrook really go into with regards to sort of foreign nationals investing in the UK, or us looking to assist in purchases elsewhere outside of the UK.
Okay, so crystal ball time. What do you see in the next 6 months? Stability, volatility, increase in any sectors? Yeah,
so looking at the forecast, inflation obviously has dropped in the last couple of days, but it doesn't mean prices aren't still rising. So depending on what market you look at, so if we look at the markets we operate in, which is second charge residential, bridging finance, commercial investment, and buy to let, you'll probably see the various markets react accordingly. I think buy to let will continue to be a good investment, but again, like I touched on, it'll be about yield and how you can create that yield, and you might need to put a little bit more funds in it yourselves, so rather than continue to gear up every time. Commercial will always be a good opportunity, especially semi-commercial, if you have some kind of space above that you can convert into residential. So you have the best of both worlds. So you've got residential stroke commercial asset, maybe split the title. Bridging, there's always, again, bridging is still very relatively cheap in the market now still. And I think that's an opportunity for people to be able to maximize and sweat an asset's value further. And the only kind of part of second charge is basically just making sure that you're, as a lender, you're responsible in your affordability model, and making sure that you stay close to how your affordability model works against what your debt you're looking to lend and leverage for a customer on that front as well.
Amazing. Well, that's a whistle-stop tour and draining you of as much information as we can possibly have. Thank you for that. So thank you very much, Gavin Seaholme, Sales Director of Real Estate at Shawbrook Bank. Obviously, as we always say, nothing on this podcast should be deemed as or construed as advice. Thank you very much for your time. Hope you enjoyed it. Thank you, Gavin. Appreciate it, mate. And hopefully we'll catch up soon.
Take care. Good to see you.
Take care.